Despite the rising number of coronavirus cases in Florida, Disney is planning to reopen the gates to some of its amusement parks in the state in less than 24 hours. Joining me to discuss is Hatem Dhiab, managing partner at Gerber, Kawasaki. Hatem, great to have you with me here today. So, big deal obviously for Disney, theme parks accounting for over 37% of Disney's revenue in 2019. How important is it to Disney's bottom line that these park reopenings, especially here in the U.S., are a success?
Thank you for having me, Nora. Yeah, it's huge. I think we should all root for Disney. They have these amazing properties that they haven't really been making any money. They've been closed for about 3 months now. So they need to open, they need to get some revenue, and I think people are ready to kind of resume life. It's unfortunate that all these cases are rising, but I think Disney will do a good job trying to monitor and open it with safety in mind.
And even Governor Ron DeSantis of Florida said that he supports Disney reopening in the state despite the rise in coronavirus cases. It is, Disney's taking a lot of safety precautions, has a lot of rules set in place, but it feels like it's quite hard to enforce some of these rules among the customers, the visitors at their parks. What do you think investors will look for once these parks reopen in the U.S. as far as compliance from visitors, as far as arising cases that can have stemmed from the park visits? What do you think some of those metrics will be that they're looking at?
Well, for investors, I think they're excited for Disney to start generating some revenues. Disney has already some experience with opening parks in China, so it's not their first run at this, and they're not going to be running at full capacity. So they're going to try things, and they may have to make some adjustments as we open. But in reality, investors really need Disney to succeed here, and they want them. It's unfortunate, but Disney has been really hurt in many of their businesses. With the pandemic, with COVID, you can think of the parks, but also the cruises and also the box office hit. So we want them to open. Yeah, the capacity is going to be a problem. You're not going to generate the kind of revenues that they were generating, but at least that's something. And I think we all need to live in a world with COVID and see some steps to at least reopening things.
Yeah, and as you mentioned, Disney's going to have to see how it goes when they reopen the parks to see how the infection rate changes. Do you suggest investors exercise caution right now, see how it goes as the parks are open for a couple of weeks, or is this potentially a time to buy shares? It's well off of the highs that we saw in late November. Is this a time to get into Disney if you're not yet an investor?
I mean, for short-term, Disney is going to see some issues. We have some earnings coming out. As I said, a lot of their businesses are impacted by COVID. Long-term is a screaming buy, I think. I mean, Disney has one of the best management teams that exists really, and I think post-COVID and as we figured out how to deal with this pandemic, Disney has some of the best assets out there. You can look at Netflix, which is, if we can call it a competitor, is a $250 billion market cap today with 200 million subscribers. Disney Plus has about 100 million subscribers. So you definitely see the bad news basically added to the price today. So if you're a long-term investor, Disney is a buy for us.
And we also, I think, as you think about the short term and the short-term patience, I guess, that you had suggested, as this is more of a long-term play, Disney spending so much on some of these safety precautions, temperature checks, you mentioned reduced capacity, a hit to their revenue immediately. How should investors think about continued costs for Disney, as we don't know when this pandemic is going to, quote unquote, go away? They might have to have these safety measures in perpetuity. How should investors be considering those costs?
I think that's the biggest question, right? I don't think anybody knows what was the overall cost of this. We know we estimate the parks being closed cost them about $1 billion, but to continue to have all these additional safety costs, I don't think anybody knows what that's going to do to the bottom line per se. I think more importantly though is the capacity issue, right? I think the Disney World does about 200,000 visitors a day historically. If they can do 40 or 50,000 only, how much can you run the park at that capacity? So I think that's really more important for investors to see down the road.
So with Disney missing out on some of its theme park revenue, also missing out on box office revenue right now, how much more emphasis or investment do you think Disney will push into its streaming platform, into Disney Plus? We know it's been such a focus already, but could this mean a at least temporary, even fundamental shift in kind of what they focus on?
Well, I mean, thank you for mentioning Disney Plus. What a stroke of luck, right, to start Disney Plus right before the pandemic. Had they not have that, I don't know where Disney would be today. They already have about 100 million subscribers there. So it's really the only bright light or place that Disney can look for some real growth. And they just had Hamilton go out there, and it was a huge success. So look at that to being a huge emphasis for them. We know about 6 months ago, we used to think that when you compare Disney and Netflix, we used to think that Netflix negative is that they didn't have any of the theater releases or the box office. Now for Disney, that's actually what's negative for them. So I thank God for Disney Plus for them. I'm sure they're very happy, and they're going to put a lot of money towards that.
All right, Hatem, thank you so much for your time today. That's Hatem Dhiab, managing partner at Gerber Kawasaki.